Hello, my name is Rick Rosenthal. I'm a director of business development at Cboe, and I'm pleased to be joined by Michael Obucina from Robinhood, Tom Jenkins from FTSE Russell. Thank you for joining me.
Pleasure to be here.
Happy to be here.
Thank you. Today we're going to talk about Robinhood and FTSE Russell, two things that are very close to my heart. We're seeing a lot of activity in FTSE Russell these days, and some of that is coming from Robinhood. So kind of curious, and I know you go by Obi, so I'm going to refer to you as Obi, if that's okay.
Sounds good. Yeah.
Could you tell us a little bit about the transition into the index options, the kind of trades that your clients might be doing?
Yeah. So, I mean, to take a step back, Robinhood's mission is to democratize finance for all. And you can't really do that if you don't offer index options to options traders. So late last year, we launched index options. We announced it at our Hood Summit down in Miami, which Cboe was a sponsor of. And now they're available to 100% of customers on Robinhood. And we've seen a tremendous uptake from our options traders from kind of the standard ETF options into some of the indices. So it's been great.
Kind of curious, Robinhood is very active in other options. How is it different trading index options from trading options on single stock or ETFs?
Yeah, the bottom line is we've seen a more sophisticated trader using index options. And what I mean by that is compared to, say, our ETF option traders, the ones that have gotten into index options tend to have a higher percentage of spread trading versus single options. And say out of the half of that mix, they're premium sellers. Hey! So what's been nice about that is, you're seeing kind of what we typically have seen in the past of single leg directional traders moving into more sophisticated strategies like selling spreads, selling iron condors, doing a little bit of volatility trading. So we've definitely seen that more sophistication come from our index options customers relative to just our equity or ETF option customers.
Yeah, it's pretty amazing. I mean, over the course of the last 3 months, we've seen volatility pick up, particularly with uncertainty in the market, threats on tariff. Tom, if you don't mind, being a representative of FTSE Russell, how does the Russell 2000 differ from the other indexes?
Well, maybe just to step back briefly. For Russell, it's as easy as 1, 2, 3. 1 plus 2 equals 3. So Russell 1000 comprises the 1,000 largest companies in the U.S. investable market, followed by the Russell 2000. That comprises our small cap index. Put those together, that's the Russell 3. And the Russell 2000, we really view it as the barometer and the engine for the U.S. economy. What are those in-country companies doing to boost the economy? Now, that being said, they are very sensitive to economic parameters, to sensitivity and interest rate movements. But at the same time, when you look at it on a vol perspective, U.S. versus large, there's roughly, call it a 6% premium we've observed in the 30-day expected volatility between the Russell 2000 and large cap. That presents some opportunity, whether it's hedging or putting on exposure. Makes it very interesting to monitor, especially with all the tariff activity.
You bring up a good point, because we've seen the Magnificent Seven kind of lead the way in terms of outperformance in the market. The small caps have been a very interesting market segment as well. These are companies that are lower cap, but they have really strong representation of what's going on in the U.S. economy. They're very sensitive to interest rates, maybe taxes, but certainly when there's an announcement of a potential tariff, it does create some volatility in the marketplace. And what's interesting, when you mentioned that the Robinhood index participants are trading condors, they're trading spreads, they must be looking at opportunities to take advantage of that volatility.
Yeah, absolutely. As you mentioned, the Russell, you might see more volatility than, say, the S&P. NASDAQ, obviously, with the Mag 7, we've seen a lot of volatility come into those markets. But what's interesting about the newer generation of traders, and I've been in the industry now for about 20 years, the rate of learning in this younger cohort of traders is just exponentially faster than it was 10, 15 years ago. like the education is ubiquitous. If you want to find options education, you can find it at Robinhood, you can find it online, social media. Traders are getting into discords and chats and learning vicariously through each other's tradings. So when we get to a strategy like an iron condor, they're learning it much faster than, I would say, generation of traders, when I first started 10, 15 years ago. So that's one point. The second point is Robinhood customers are very familiar with the constituents of the smaller caps. They tend to trade the single names on the small cap side more than, say, like the bigger indices. But there's that natural progression, right? They get familiar with some names, but maybe they don't want that exposure and that volatility risk to a single name. So they turn to an index like Russell to maybe get more of a broad-based exposure and then trade that volatility.
Excellent. So I'm going to take this moment and talk a little bit about the liquidity in the Russell product. So the Russell is one of the top 3 index options traded on this floor exclusively. And it's now averaging over 73,000 contracts a day. So if you look at that in notional terms, the Russell index is close to 2,100. And that means about $1.5 billion worth of notional value being traded every day. The other thing that's interesting is that you have a mini version of the Russell 2000. So I'm kind of curious to learn if the traders, your clients, are familiar with our mini products.
So at this time, the mini Russell is not available at Robinhood. We have the mini S&P.
Okay.
So from a sizing standpoint, we'll see a smaller mix of our customers. Robinhood customers tend to have smaller account sizes than some of the more traditional firms. But they can get exposure through the Russell through spread trading. I think that's why spreads are a little bit more popular, a little bit more capital efficient for a smaller account size, can define their risk while still getting exposure to that larger index.
Do you think your clients are also familiar with the difference between an option on an ETF versus an index option?
Yeah, and when I said earlier, the sophistication level, what they're looking for, the attributes of an index option fits them perfectly. And what I mean by that is for some of the more active, shorter duration traders, right, they don't want to have that risk to physical, settlement where, an option they're carrying late in the day has early assignment characteristics or anything like that. And a lot of our traders, they tend to skew more towards the shorter duration, 0 day, 1 week options. And so an index option gives them that assurance that they can carry a position into the close, be cash settled, and not have to deal with some of those nuances of the American style option.
Terrific. Tom, we've been talking a lot about the options, but I think it's important to note there's an ecosystem behind the Russell derivatives. Can you talk a little bit about what makes up that Russell ecosystem?
I think it all starts with adoption by the investment community. You're looking at over 10 trillion that tracks the Russell US index series itself. I think what's helped us is by partnering with Cboe to expand the menu of options offerings. Started with monthlies, expanded to weeklies, went to some parts of days of the week, then we filled out that entire menu, even to include Friday PM setup. So that has given traders so many other angles or options on the menu to use as they try to exercise their different views on investments. And that being said, we've also seen ADV go up 20%, or it's now 20% of ADV is tied to 0 DTE. So it's telling us the community wanted this, it's being adopted, and we're all learning as we go on how best to use that.
That's fantastic. You brought up an interesting point before, which is the difference in volatility between large caps and small caps.
Yeah.
You mentioned it was about 6% premium in small caps, which would offer some very interesting opportunities for those who want to take risk, as well as those who want to harvest volatility. So out of curiosity, why do you think the small caps have higher volatility?
When there's economic news announced, those small cap names are going to be more sensitive relative to their large cap peers. So along those lines, we have a wonderful index with you guys, RVX. So looking at the Russell 2000 volatility index, that's a good barometer of understanding what's going to happen in the next 30 days, potentially on an expected vol basis, up or down. Again, that presents opportunity. It's just a question of how does that fit in with your total trading strategy.
So for your benefit, we've got the Russell now with RVX, which is our volatility index on the Russell 2000, right around 24. The volatility on the S&P 500 or large caps is, let's say, roughly 20. You mentioned you have clients that are watching volatility and trading vertical spreads. They might be trading condors. Do you think they're looking at the difference in volatility between small caps and large caps and how to take advantage of that?
Yeah, I think, every trader's looking for volatility, right? Volatility creates opportunity. With that comes risk, of course, but that's, in the data we see, there's, once again, more spread trading, so they're reducing their risk, they're defining their risk. But being on that shorter duration allows them to be more specific with their opinions. And I think we've seen that not just in the indices, but the single names, just the ability as a trader to more accurately express your opinion, those shorter dated options, and then the volatility that's kind of playing out each day. It gives retail traders a different menu of options, pun intended, to kind of navigate around. So, I think it's the natural progression of where these markets have gone over the last 20 years. They're so efficient, the spreads are tight, commissions are practically nothing, and on index options, this is actually the first time Robinhood had to figure out how to do commissions, because we never had commissions on equities and ETFs. So, but we do have what we would consider a very industry-leading kind of low rate for contract rates for options commissions. But then if you're a subscriber to our gold product, you get a reduced rate. So all of that together, I think, creates a menu of choices for retail traders to express their opinions, especially through an index like Russell.
So with the 30-day volatility on the Russell 2000 being at 24, it gives an awful lot of opportunity for those who want to take advantage of volatility, either expressing a long or short view, or to hedge against volatility. And as we pointed out, we have those who are looking at participating in a short-term basis or longer-term basis. I think Cboe has most participants covered in terms of the products, in terms of liquidity. And I just want to say thank you to both of you for participating at today's talk, and give you the opportunity to add if you have anything you'd like to add before we sign off here.
I appreciate the opportunity, Rick. Before Obi closes this out, I would just say, on the education front, we're the index provider. We also are beefing up what we provide to not only our clients, but also to the public domain, because as a transparent index methodology provider, it's really important that you can see what we're doing and how we do it. So I would encourage people to check us out if they want to learn more about the underlyings of the index itself.
Terrific. And if they want to learn more about trading options, index options at Robinhood, where do they go?
Head over to learn.robinhood.com. We have an entire suite of articles about index options. And then the last thing I'll point out to your previous question, we just launched index options on our brand new web platform, Robinhood Legend. So for maybe the more advanced trader that likes the desktop as opposed to mobile, and with that will be coming very soon a new suite of volatility metrics. So we're continually adding to that platform, and we've seen some great adoption from our index options traders, both on mobile and web. But bottom line, if you're going to trade these products, educate yourself, understand the risks, and then define your risk and trade safely.
That's great advice. And at Cboe, we have an Options Institute, which provides education to all market participants. You go to Cboe.com, you see a tab for education drop down, and you can learn all about different strategies. Gentlemen, thank you very much for participating today. I think we learned a lot, and I greatly appreciate your participation. Thank you.
Appreciate the opportunity, Rick. Go big with small caps.
Pleasure being here. Thanks, guys.
Thank you.